Okay, just going to give you a little bit of the information on mobile home loans, mobile home financing, how to get financed for a mobile home, so that if you ever want to get into a mobile home, you've got some information on it. Quickly, there are some companies that, nationwide companies, they do loans on mobile homes and parks. There's about 4 or 5 big ones that I know of. Now, navigating this whole thing is interesting because each one is different in who they'll lend to and why they'll lend. Here's what I mean by that. Some will not loan on a mobile home older than 15 years old. Some will not loan on a credit score below 660. Some will not loan less than $20,000. So you've really got to get into all the details with each one of these companies to know who does what when, so that when I'm talking to somebody who needs to get a loan on a mobile home, I have to know about them, the park, the home. You see, there's all these factors. Then I can go, okay, looks like this could work with this lender over here. There is one lender that will loan on a credit score of 600 to 650. Now, all the lenders require a down payment. They want to see that you have some skin in the game, is a term I guess we could use. You've got something. You're putting something into it. They're not going to loan you everything. There are no mobile home finance companies I know of that will do that. The lowest amount is percentage amount that I know of that they do is 5% of the sale cost of the mobile home. So if you sold a mobile home or bought a mobile home for $100,000 and you had a good score like in the above 720 or something, you would only need to make a $5,000 down payment. If it was a $25,000 mobile home, it would be like $1,250 or something like that. It wouldn't be that much. And that would be your down payment and you'd be in. So the higher the credit score, the lower the down payment they require, right? Most of the lenders want to loan $20,000 or more. There are a couple that will loan less, but then those lenders want to see a higher credit score. So to make it simple for you, on the lenders, here it is. Credit score of 600 or better, you can usually get a loan. They're going to also look at the amount of income you make versus the amount of debt that you already have and how much getting this mobile home and this monthly park payment adds to your debt. They have federal guidelines, and I can't say that I know every little rule everybody has. But I do know that nobody wants to put you in a position where you're paying the majority of your income to live somewhere. That makes no sense to anybody. And so in order not to jeopardize you financially, they're not going to do that. Roughly about 41% of your income, I think, is about the top between the park lot rent and the monthly payment to the finance company that anybody wants to go. So figure that out. If your lot rent is going to be $700 and your payment's going to be $250, so you're up at $950, you can't make $1,800 because that part is more than 50%. It's got to get below 41%. So you probably have to make about $2,400. I hope this is going to help a lot of people because these are the kind of questions I answer, believe it or not, all day long. And I guess, these mobile home finance companies don't do enough advertising and they don't do enough communication to really explain clearly how it all works. But that's how it works with them. 2 other ways that you can finance a mobile home. One is if you have a savings, of course, you can do that. Some people have a retirement account. Most retirement accounts will let you borrow the money out of the retirement account, and then they require you to pay it back at 2%. Now, that seems kind of crazy to me. I mean, you just borrowed your own money, and you have to pay 2% on it. Go figure. But that's how they work these things. On the other hand, though, the percentage rate at a mobile home finance company is going to be higher than that anyway. So if you have a 401k, that's the best deal. But why you have to pay interest on borrowing your own money is something I don't think I'll ever understand. Now, the third way that you could buy a mobile home or finance a mobile home was something called owner financing. Now, people ask me about rent to own, and I always say, no, there is no rent to own that I ever do because all the parks I work in do not allow rentals. So with no rentals allowed, you can never do rent to own. Now, owner financing is kind of similar to rent to own, except you skip the rent part. And what it means exactly is the owner is going to be the bank. Instead of going through a finance company, you're going to give your down payment to the owner and make monthly payments until that home is paid off. At least to the best of my understanding, that's owner financing. And I do that on occasion. I do not do it on a routine basis because I've said that I do it. Some people think that maybe I do it on a routine basis. And I'm sorry, I don't. It would be a good thing, actually, if I could do it on a routine basis because it actually would help a lot more people get into homes. But it's expensive to do. I mean, there's a whole lot of money tied up in a home, and you don't see it back for many years. So that's what I'm saying. That's the reason that it gets hard to do. But I will do it on some homes. Or if sometimes, let's say, a person can get pretty close on the full payment of a home, but they don't have all of it, then I will do owner financing on the balance, So those are the three best ways I know about owner financing. I mean, I know about financing mobile homes. And if I get more information, I'll certainly give it to you. Please give a like to this video if it helped you. And thanks for letting me talk to you again.